Welcome back to my channel. So today's topic is how to mark market structure in the simplest way. Well, I had to come up with an idea on how to mark this market structure because I was getting really frustrated. I always give a shout out to my coach because that man really helped me a lot. I cried a lot and he was always there. I can't stop. So I'm giving this video out because this is the foundation of SMC, that's smart money concept, and also ICT, the inner circle. If you have a problem with your strategy or anything, I always tell people that are coming in to always go back to the basics, and that's market structure. This was what I fought with for a very long time before I was able to find a way, an imago way to understand it. Now, we all know for a bullish momentum, market moves like this: higher high, higher low, higher high, higher low, higher high. Now, in our eyes, we are seeing a break of structure here. Okay, the microphone is not holding. Let me use a straight line. In our eyes, we are seeing market doing this straight line here as a form of break of structure. What's wrong? That's weird. Okay, let me do this. So we have here, we have a break of structure here. We have a break of structure here. We have another break of structure here. As what the bullish momentum break of structure. This is what we are seeing with our eyes, right? But indirectly, market is not going like this. Market is going like this: higher high, then higher low. Now this is how market is moving. So only this thing that you are seeing as a break of structure, you are seeing as higher high, which is this higher high from the low. I'll show you way high market to make it easy for me. From the low to what? To the high. This entire environment. Why is my mouse misbehaving? This entire environment from here to down here before it pulled up, coming down here before it pulled up. If you go to a lower time frame, if you want to actually refine entry, these are here people tell you they go to a higher time frame, get a good zone, because those zones are zones that are going to hold, and they refine those zones to a lower time frame. This is what they mean. Now the way for market to retrace back, they can counter trend it, it's still going the same way. They're waiting for it to come down to a fair value gap and other block or liquidity void, and when it gets there, they wait for a change of structure. So indirectly, this whole environment you're seeing here is your swing structure. This is your swing structure because this is your break of structure here. That's where your break of structure is taking place. So all this environment you are seeing here is your swing structure. Don't forget. So inside this whole break of structure, there is a minor change of character inside for it to continue to pull out and break this liquidity on top of here. I hope this is very explanatory. Now if you go for the sell momentum, let me delete this one. A shout out to my coach again, SK. A shout out to him for explaining very well all I'm explaining here. He took his time, and I know a lot of people out there are struggling. So in case you are struggling, go back to the basics and learn structure. It will change a lot of things in your trading. Now, how do we know a downtrend? Lower low, lower high, lower low, lower high, lower low. The same thing that I just explained previously. Lower low. Oh, delete that one, it's not nice. Lower low, lower high, lower low, then it gets to an order block or a fair value gap or whatever you're marking, the shift structure. Many of us will follow this whole trend as, oh, market have shifted structure, or why is market not coming out to break that spot? Well, actually, there was a break of structure here, making this whole environment a strong zone. You can put a line here to remind you that that is a strong high that has not been broken yet. All this happening here is internal liquidity, and there was what? A break of structure here. So inside this higher high, higher low, higher high, higher low, some people call it swing structure. This whole thing, some people call it the swing structure. They will tell you what has the swing structure message told you, and some people call the inner one the mini structure. Some people call this whole zone micro structure. Some people call this the whole zone minor micro and micro, sorry, macro and micro. So if some people's chart or with the teacher will tell you, oh, the swing structure, this is swing structure, this is the inner structure inside here, inside the swing structure. Some people tell you macro structure, this is the macro structure, the mini structure is inside here. Now going down into the chart, okay, I chose a 4 hours time frame because it's a time frame that a lot of traders, a lot of people actually trade a lot. Now if you can see this 4 hour time frame, right, I want to give you a good example. Okay, let me do this so you can understand what I'm saying very well. Now if you look at this environment here, if you can see this environment very well, I came up with an idea that made it very easy for me, and I hope it helps you also. Now this is break of structure here, right? There is a break of structure here. This was what created the break of structure. This is the low and this is the high. You can put a line there. This was the idea I came up because I really got very confused, so it helps me a lot. You can see this one market shifted structure here. This is the swing high and this is the swing low, marking here as the breaker, and you see what happened is going up. We will have thought this was the situation here, but instead it was reacting at this breaker block here. But that's a long story for down for another day. Well, now on the higher time frame, market has to come and take out this high. You see how you've marked it now? You've made it very easy for yourself, so you know that you are dealing with internal structure. For 4 hours you can come down to 15 minutes, but in that 4 hours, when you use your third analysis, you mark this whole place as your order block. You follow the rules. Is there a fair value gap? No. Is there a mitigation block here? No. Is there a rejection block? I can call this one an rejection block. Put my line here as a rejection block. Is there a breaker block? No. Is there a what again, liquidity void? No. Is there a fair value gap? Old lows are old highs. These are the old highs here, and these are under old high here, than that old high here. These are the question I asked myself on 4 hours. I can come down to one hour, but I would like to go down to 15 minutes for a more refined entry. Now on 15 minutes, you can see that when it came back on the zone, when it came back here on 15 minutes, there was a mitigation. Was there a mitigation block here? Okay, there was no mitigation block there. There was a mitigation violated already. There was an other block here, but there was what? There was a breaker here. There was a breaker. The market came to come and react in. Just follow the rules, but that's not what I'm showing you in this video. Now you know that we marked this zone from a higher time frame of 1 hour, right? And it's already in our zone of 1 hour. Do not get confused. So you know behind your mind that if you are taking any form of selling in this environment, this already refined you. This marking has refined you inside this zone already. So you know that from the higher time frame, you know that there is no any form of sell because the sell has ended in this zone. Until markets break this low under here, the structure has changed entirely. Now if you look at 1 hour, there is a shift in market structure here. The shift in market structure here, a shift in market structure here. So at 1 hour, you can mark this whole environment. You can mark here, and you can mark here to here as a 1 hour zone. You can see here as mitigation block. Those are places that potentially places that market might likely come and react. Just expect market to react there because why? There was a shift in market structure here. On this same 1 hour, what am I still seeing again? I still know behind my mind that on a higher time frame, the market is still a bullish momentum. But on a 1 hour, you can see the change of character mitigation block around here. What am I seeing again that looks valid for me? This was a mitigation block. Fair value gap is on top of here also an SND is here. Then I can come down to 5 minutes or 15 minutes. These are things that happen on a higher time frame. On 5 minutes, I'm not still seeing a good thing here, But this is a swing point. This is how we mark market structure. Don't get yourself confused though. This is a swing point oh. This is a swing point, right? But if you go to a lower time frame, also in 5 minutes, you will see a structure in that environment. On a higher time frame, that's 15 minutes or a lower time frame, you can see that there was a break of structure here, also a break of structure here. Market came back, touched the other block, came back again, touched this other block, came back again. So if you draw a Fibonacci from the high to the low and try to find something around here with the fair value gap, or let's see, there's liquidity on top. But let me delete this because we are done with that environment. We know that we're going for a buy. Anything we're looking for is market is going to go for a buy. Now if you look inside this environment very very well, right, on 5 minutes there was a swing point here as a shift in market structure. You can see it, right? There was a swing point here because what happened here, there was a break of structure on 5 minutes. This is how you people get a lot of entries. They'll tell you they had 1 to 10 or 1 to something, blah blah blah. Well, this is how they do it. This is a mitigation block. Then use your rule. Is there a mitigation block? No. Is there a breaker block? Is there a breaker block? Yes, here. Can mark this as my breaker block. Well, that was a swing point, a break of structure. Is there a fair value gap? There's a fair value gap beside the breaker here, and also there's a fair value gap from here. You can see that, right? There's a fair value gap inside here. So what I can do, I can take the risk and take my trade from the fair value gap. I can decide to take my trade from this. This is 9 or 10 pips lower. I can take my trade from the breaker block. I can be patient enough and wait for the fair value gap. Then I will come down to 1 hour. You can see what I did, right? Why is this happening? What's on my chart? Then I will come down to 1 hour. Since market has gotten to my zone, then I can refine this as my profit. Now what am I seeing here? You can see that market, even though I had taken profit in here and I've done 1 to 3 already, I'll take my profit from here because I know market is going to come and sweep out this liquidity on top. And you can see how refined the zones are. Oh, it got me stopped out. I got stopped out. Why did I get stopped out? This is a question you should ask yourself. Now don't forget, why did I get stopped out? I'm still in the whole range of my 4 hours. This under plus has not still broken. But if you look at 1 hour, what did I show you previously? There was a fair value gap here. Market has reacted to. You can see it, right? Now this is not a total analysis I'm doing for you. I'm trying to show you the power of structure. Market still respected structure. It's still going to go back up because why? I'm still in the bullish scenario of 4 hours. I will try another example again. Until market breaks this down here, until market break this under here, until market break it, that is when I know that my buy is still shaky. I'm afraid. Oh, buy. If market still come down here and still does a shift in market structure on that same 5 minutes, market shifted structure on that 5 minutes, I will still enter it again. You can see here there was a swing point being broken here on that same 5 minutes, still broken here. You can see that, right? As a week. And I mark my mitigation block, my fair value gap. I mark my mitigation block here. There was a break of structure there. I don't like that break of structure. It's coming out with a week. Okay, that's not a break of, that's where the break of structure, this one was the break of structure in that zone. So what am I going to mark as my mitigation block? This is my mitigation block around here. But there was also an inner structure inside here. You can see it, right? So this was the mitigation block was around here. That was the mitigation block around there. I'm just giving you an example what you should be looking for and how you can mark it to refine your zone. I can take it down here and I will still target that my same targets. I'm not still scared because I'm inside that zone. I will still give it the same target. I will still target here and I will still target here. And you can see what I did. And how many ratio did I get? I got 1 to 8 here. Even though I would have broken even from here, but I would have still gotten 1 to 4 because I would have still been conscious for my 4 hours. And if I see that there was a break of structure and a fair value gap, I would have still been very, very conscious of this environment, which I told you previously that I'll be very conscious there. But I know that market has to take out those liquidities on top. You can see it, right? It has taken a liquidity here, and you can see it has broken the liquidity one. I can take my first profit here. Don't forget also there's a swing point here to here, and you can see that is TP2. You can see that, right? Now this only structure I did. I just marked the high to the low of the 4 hours, and I went down as low as 5 minutes, 15 minutes in the same 4 hour zone to get a good trade. Now you can come down. I can play with this thing for as long as I want. Let me delete that one. This is structure marking. If you know how to mark your structure, it's not be a problem for you. Let's do this for you. Trying to find a good structure here. Higher high, higher low. Okay, that's 1 hour. No wonder it's too rough. Okay, now 4 hours. There was liquidity grab there. Trying to find something nice. I'm still with you, please. Let me still use that zone. Now there's a break of structure here. I don't want to take so much of your time in this video. Break of structure here. I always put a line just to remind me that I'm confined into that environment as a bullish momentum. I know it might make your chart look very cocky and very tight. I understand that, but this is just to help you not to make so much mistake or anything. A reminder, I would say. Now there's a break. There's what? Another block here. Another block. What's on my chart? Why is it moving? Okay, be serious. Okay, there's a break of structure here, and you can see there's another block here. Fair value gap also. It's a fair value gap. Other block. You can decide to counter trend. Let me wait for a retracement back. If you go to a lower time frame of like 5 minutes, on 5 minutes there is a break of structure here. There is a break of structure here, which signaling that down here is a swing point. Until market break this low down here, when the market has changed direction, let's keep going, and you can see it's respected the other block. The other block here. There was a respect here. Okay, I'm not counter trending. Okay, to show you how it's being done. This is the only way I was able to make my charts very simple for myself. And when I came up with this idea to trade like this, it became very, very easy for me. I stopped crying. I stopped feeling so bad when I hit stop loss. Now, market did not come back to this other block here, right? But market came out with a body. Can you see it here? Market came out with a body, and there was even a structure here. Market came, reacted there, and moved on. But now I'm going to mark this for my high towards to my low. You can see that, right? You can use your Fibonacci and draw your premium and your discount. But what am I seeing here? I'm seeing another block. If I use my Fibonacci from my high to my low, this is structure, right? This is the only structure I'm showing you right now. There was a break of structure on 4 hours. I'm reminding myself that I'm confined in a buy scenario. So whatever I'm trading now is from the internal structure. Okay. Then I come down to 15 minutes. On 15 minutes, if you look inside very well, you realize that break of structure here, and also this is swing points that market has not yet broken yet. So you have to be very conscious until markets break that swing point with a body. Should you consider it a counter trend? But you can go and check it on 5 minutes. If you can see a break of structure on 5 minutes, it's still showing you that same zone. So you just patiently wait for market to get to your primary POI, which is here, or you can counter trend, enter the mitigation block here or here. Market reacted mitigation block, enter your trade, and you're good to go. Now this market has gotten to our POI. I'm waiting for 5 minutes. Let's see. I can mark this whole zone here as my shift in market structure around there. I don't want to confuse you with this video, something that is very easy. Let's see. Okay. Just the point. Market has shifted structure. Now if you look inside here very well, right? There was a swing point that was inside here. You can see that, right? There was a swing point that was inside here with a break of structure. Markets came out of that structure, came back in with the body again. There was no any form of movement. Also, there was also a break of structure here. There was a shift in liquidity here before markets pulled out and created another mitigation block inside here again. Just learn the swing points video. Watch the swing points video and trading becomes very easy for you. You can come as far as 5 minutes to see what's happening. Be conscious of this whole zone here. You can see it, right? You can take your trade from that swing point being broken. As long as this swing point has been broken, this upper one here that got broken here, this swing point has been broken on a lower time frame in your primary POI. Don't be scared to enter the trade. You can enter the trade. You can enter the trade. Long as it has broken, came back to a breaker block. Anyhow, you see a fair value gap there, and you got to mitigate that fair value gap there. You enter the trade and you're good to go. Then you can go to a higher time frame of either 1 hour. You can target a 1 hour here. You'll be conscious of this place, take some profits, and you can target also this environment. You can target as far as this far place, but don't forget about your rejection block. These are zones that market is likely to react in. You can target all this area as a form of entry and be conscious. Market went against us, but at least you banked some profits. That was like 1 to 9. Do you see that? That was like 1 to 9. Don't forget I said be careful about this rejection block here. These are zones that you be conscious of until market breaks this low. Until market breaks this low down here, we know that market has changed trend entirely. Do you see a shift in market structure has happened on 4 hours? Can you see it? A shift in market structure has happened on 4 hours. You see that, right? A shift happened. It came back for a fair value gap here, and also the other block here. Do you see that, right? A shift in market structure happened here. Also, there also a shift in market structure here. If I look at it very well, there was a swing point here. Market shifted very well here. You can see that, right? And it came for the other block here if we had refined. So it's about marking the market structure, and now market violated this other block here, and it's going to go down and grab all this liquidity under here. You see, all these old lows become a form of liquidity as long as market have shifted structure on 4 hours. This video is going to be very long. I'm very sorry about making it this long, but I hope you gained a way of marking your structure, putting a line just to help yourself know the macro to the minor structure, and I hope you make a change in your trading. Don't forget to subscribe and ask questions. Thank you very much.